The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to start out the day, as always, with the German DAX. As you can see, we had a large gap up, compliments of the Chinese market, particularly the Shanghai, and then also the Nikkei, and then followed by the Hang Seng. They all gapped up, but the Chinese market gapped up a huge amount, folks, just about 3%. That's on top of the one that gapped on Friday, so there must be some big news over there. I was fortunate enough to be invited to speak when they opened that Shanghai Stock Exchange. Oh my goodness, 5, 6, 7 years ago, I guess. And I spoke there for a couple of days, and it's a beautiful building. But it's not like the trading at the Chicago Mercantile or the New York Stock Exchange, folks. It's all electronic, and they have a bullpen there where the people can sit there and watch it all going on and put their orders in too. But it's not like here in the United States. I don't know how the bid and offers work, but it's certainly different. And then they also have breaks sometime where they'll break for half an hour for lunch or an hour, and that doesn't happen in the United States either. So it is a little different, but it trades pretty nicely. But with these gap up, it must mean something pretty significant. Let's take a look at the next one that we want to watch, which is the FTSE. Now we know now that Theresa May is going to be looking for some new employment here pretty soon, it looks like. And I don't know what's going to happen with Brexit. The British pound is acting well. I mean, we've always felt that British pound still has a chance at 135. And it held a key level last night at 130, and we've had a pretty good rally off that bottom. So it's going to be interesting to see if this is going to be a, April Fool has been canceled due to current state of reality. I think that's pretty good, Mr. C. I like that one. Anyway, happy April Fools to everyone, folks. I don't know how that thing got started, but it's sure a big deal. Okay, let's move on to a couple of things that I'd like to chat about. One is the state of the wheat. Let's get this up here. Is the crude oil. We're really critical level up here, boys and girls. Take a look at this. This is the your May crude, your spot crude oil. You'll notice that we have that 3-drive pattern forming up there at that 1.27 expansion at 161. I had an order sitting in there at 60.98. We got to 60.92. I still have that order setting in there. You don't have to risk very much at that point. You can trade a $60,000 contract for $500 or less at that point. But pay close attention to that for a couple of reasons. One is that 3-drive pattern that is there. Also, that parallel channel line that we've had in there for quite some time, dating way back to January, is still in effect. It hit it again in February, hit it again in March, and we're hitting it again on April 1st. So keep an eye on this one. This could be a real sleeper because there is a big divergence between the crude oil and the heating oil. Heating oil is the one you should sell because it is the weaker. I actually like trading crude more than I do heating oil, so I'm looking at the crude. So we'll see if that is going to be the case. David is telling us that April Fool's Days date back to 1582. It was from France, I guess. Oh, I'll be darned. Okay, that makes good sense. Why, David? I'll tell you, that's why they call you Super Dave, buddy. You have the wealth of information like I have never seen, and I've seen a lot. Okay, let's talk about something that was posted this week that several people asked me to comment on. It was a chart coming from I don't know which one of these programs it is because I get so darn many of them that I don't even open. But this is one that brought my attention to something, and that is they did a study. They did a back study, and what they did is they're comparing the 1986 market to the 2019 market. You can see as you look at this, there's some very nice correlations, and it's saying, you know, it should be up for however long this is. This is a daily chart. Now, this is very interesting because this is what happens to markets all the time. This is what my artificial intelligence program is based on. All it does is it goes back over the last 30 days of 2-minute charts, and it categorizes what happened the previous 2 days. And it starts by reducing the probability of, if you had a real straight up move, the probability of that happened on the third day is very rare. So by process of elimination, it eliminates what will probably happen in the next day. So it gets down to making a forecast to what the next day move will be made by looking at the last 30 days and transferring that information to what we think is the best possible turning points based on what's happened over the last 30 days. It's done by using a neural network with some fudgy logic and genetic algorithm stuff that's so far above my pay grade, I don't even want to remember it. But anyway, we'll watch this. We'll watch this a little bit, and I'll let you show. Here, I'll put up the. This is the forecast for today, so you can look at the key times. It has nothing related to price, nothing at all. You'll notice that the key time is almost at magic time at 10:15, and we should be down into 12:35, around 12:20, and then a rally towards the end of the day. Remember, the Dow Jones is gapping up 200 points, which is in itself an outlier event, but there's going to be some pretty good swings in between, would be my guess, with this type of volatility. So we'll watch that as we go through here and look at some of these other things that we need to cover. One is, of course, is the bonds. We feel very strongly here that these bonds have had a pretty good run, and we think we're at a very, very strong inflection point in the bonds at that 150.20 level. That was exactly the 61% retracement from the high we made back last September. The amount of rally that we had from in 2017, it rallied 26 weeks. Yes, the last week was the 26th week, hitting the exact 61% retracement. Folks, you can't make this up. This is very important. Anything above 151 tells us that that head and shoulders pattern that we've looked at will take us up to at least 156. But we got to clear 151 first, and right now the bias has to be the downside for those three factors. One, the 61% retracement. Two, the 26-week rallies that we've had here, and also the 1.27 expansion over the last 14 weeks stopped right where it was supposed to stop. So three big things up there in that 150 and change. And remember, it's all based on technical analysis. It has nothing to do with the fundamentals. I don't do much in fundamentals at all. So we'll see what's happening as we look at this. So anyway, we'll be looking at a few other things at that we're watching today, but those are the main ones that we're looking at. I want to cover the wheat market here for just a second, folks, because this is the last 6 weeks of the May wheat, and you could look at May or July. I'm watching both of them, but you'll notice we had the 3 drive to a bottom pattern come in at the 425 level. That was actually the 78% level on the weekly chart that we talked about. We rallied from 425 a bushel up to 477. We backed off over the last 4 days, mainly because of the crop report. We made a 50% retracement last night in the wheat, but we don't have a corresponding really nice ABCD pattern here yet. So what I'm waiting for is for more confirmation to see what this could possibly be. But I want to cover a little bit more about this wheat when we get back, because it has interesting cycle phenomenon.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. I just wanted to bring to your attention that wheat chart that I put up there. It's basically got a cycle on the bottom. You can see the sine waves, and you'll notice that some of those hits are pretty much spot on. And the key thing to look at this week is that we do have the new moon on Friday. So that would be a time, because wheat works so well with full moons and new moons, I would certainly be looking for a trend change in wheat. My ideal situation would be the wheat to pull down to about the 61% retracement. Now, that's just my wish, and you don't always get your wishes, but that's what I'm looking for in the wheat. Now, the next thing I needed to mention to you is that we're going to have a couple of guests this week. So on Friday, we're going to have our good friend Norm Winsky from Astro Trend will be on. And then earlier in the week, either Wednesday or Thursday, we hope to have Sam Archibald Arrington Hicks Crawford from Crawford Perspectives come on and talk to us. And a possible for tomorrow is Bill Meridian, but he's traveling and he's not sure, when he'll be back to his office. But if he gets back in time, we'll have Bill Cerubi on to talk to him about what he sees going in some of these cycles that we're looking at. So let's move on to the next question that someone had, and that was about the utility index. I wanted to get this up here to take you a look at. This is from an old-timer. Yep, I'm waiting for a new moon on Friday, Marshall. That's exactly right. But even more important than that, Marshall, I'm waiting for Thursday. Thursday's a very important Astro Day here in Tucson, Arizona. It is April the 4th. It's known as, guess what it is, folks? It's Margarita Thursday. We'll see you then. Marshall. Here's the Dow Jones Utilities. The question is, we have that big ABCD pattern, as you can see from the low back in February. We had the pullback to the 78% level. The D level went up spot on to the exact price. Now we backed off a few days. That is really indicative of a double topping type pattern, folks. And remember, it's all related to the emotionalism that's going on in those bonds with negative interest rates, which something is, I just don't understand how anybody would be silly enough to use a negative interest rate. I don't understand that. I still don't understand it, but I guess it's a matter of fact. But later on, maybe history will tell us that this is the way it's going. So we'll see what's see what's going on right here. Okay, that's the utilities. We also had a question about the Dow Jones Transportations, and I'm sure they're going to be up big today. And you'll notice that there is a ABCD pattern up here, about another 50 or 80 points higher in the transportations. Yeah, well, there's more than that. It's 150 points higher. That'll be a heck of a move if it gets up there. But for the Dow up 200 on the opening, anything could happen. So this is what we're watching here in the Dow Jones Transport. So they're just acting extremely strong. Asia is pulling everything up, but that's neither here nor there. They can certainly do that. Hold on one second here. Someone's asking a question here about, the IWM. Let me get this up here, and you'll see here that the IWM is weakening a little bit, but with today's action, we're going to be challenging the old highs back here at 26,000 and change. This is the Dow Jones, folks, not the IWM. I'll do it next. So with 200 points higher, we are going to be above those highs. Yeah, we're gonna gap above those highs, aren't we? We sure are. That's going to be real interesting. So we'll see. That's with that gap Friday and another one. We're going to have two gaps in the Dow Jones, which in itself is unusual. It used to be unusual, but not anymore. But with 200 points, that's a pretty big handle to look at. But I still think we're going to have some swings in the day because people are going to be taking profits with that type of a move for sure. Let's get that IWM up here to take a look at it here. I think what I did was yes, I did. I did it wrong too. Shut the front door and raise the rent. You know what I did, folks? I did it wrong in the newsletter too. I doubled up the Dow, and I didn't put the IWM in. But the IWM is lagging badly compared to the others. But the Nasdaq is still, really moving up quite a bit. And with today's action, we most probably are going to get above these highs here, and you'll be able to see this thing up here. We only have to get a little bit higher, another 100 points, and we're going to take that NASDAQ out. And I think we're up about 80 already, so that's not a big deal. That's the 78% level, but, we might tag that, and we'll see what it's going to do from this level. So those are the ones that we had questions on. Let me see what else I need to cover here. We've got a few more minutes. We've got more than a few minutes. Oh, I wanted to bring to your attention the dollar index, because that's the one that I think has got the biggest potential, because we are at a very, very, Hong Kong closed up 1% and China up 2.5. Hold on here. You'll notice here that we had that 61% retracement. We've hit it 3 times during November, December. We hit it twice in December of last year, and now we're trying it again. If we can get above that 97.70 area, that means that this market has got a lot to go, and that means that the euro, because we hit that bottom, which was a perfect 61% retracement on the weekly at 111.65. That was the exact low. That was the exact price on the euro during that price. And if we can hold that level in the euro, then it's got a chance to rally. And if we look at the euro where we are today, we're up around, we're 112 and change a little bit, but we're down 10 days. But there's so much support there. But boy, if that support gives way at 111.60, folks, that's going to be really negative. I posted that weekly chart many times in the euro, and it's got 108 and 106 and 104 written all over as far as big ABCD patterns. And it's had a chance to break out to the upside at 114.60, but it did not do that. That was a 78% retracement of the January high. And if you measure that ABCD, it's way below par. So watch that one, because if it breaks out to the downside, and if it breaks out to the downside, it's going to be quite nasty. Remember when we were talking about gold, when it was up around that 13.55 level, how important that was? It dropped $68. We then rallied back to a 61% retracement in the gold, and now it's looking like, it's ready to go a little bit lower. We're trading at 1,300 now. It's rallied about $11 off of the bottom, and it could turn and make new highs from here, but right now I believe the gold has a pretty good chance here of heading down to this level of 1260. If you look at gold here on the June gold, from the last high that we made, was way back on February 20th. We were down 10 days, and now we're coming down into 10 days, which will be April the 9th. That'll be next Tuesday. So we want to watch that very closely, because if it's making that level at 1260, that will be a very, very strong buy, because it's going to be at a 61% retracement. You're going to have a perfect ABCD lined up. So, watch the gold. If you want to be long the gold, 1265 is what you want to be watching for. Ideally, the time would be the 9th, which is spot on with the new moon coming in on the 5th. So we got the weekend, and bada bing, bada boom, you're right there. We'll be right back. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're back, and we're going to take a look at that chart for the IWM. As you can see, it's been lagging, but with the big gap up today, it won't be lagging too much, I wouldn't believe. So we'll see if that is going to, be the case. Let's take a look at something from our friend Bill Meridian at Cycles Research, Vienna, Austria. He had this in his letter this week. It says, this is a pre-election year, and its effect must be taken into account. Over the past 70 years, the first half of all pre-election years have been up in all 17 cases. April has closed up 16 of the 17. From 1885, which was a couple of years before the Dow Jones Industrials was invented, Aprils have been up 70% of the time for an average gain of 2.7%. That 2.7% figure was the highest monthly figure during that period. The S&P has risen 16 of the past 17 cases from March 15th to April 15th in years before an election. And this is a year before an election. So we've got a very positive bias here. Plus, if you stop and think of one of the old market adage, you know, sell in May and go away. So the end of April, the 1st of May is where you probably want to be looking. Folks, I looked at this thing over the weekend and, you know, I said, gee, the only way that this thing could be bearish is if it gapped down. And I sent out a video 5 minutes after I saw that 10-point gap up in the S&P saying, you know, it's not going to open down. So, you know, don't look for any types of reversal. So that's what I'm saying. You know, whether that'll have anything to do with any of these other markets, I don't know. But right now, you know, we had a really nice sell signal up there at 28.70. We dropped 60 handles, and here we are. We're really close to it again. We're trading at 28.60 right now. So whether we get to that 28.70 today remains to be seen. But with the Dow gapping up 200 points, it's going to be very, very interesting. Let's see how much the gap is. Let me check the prices here, and we'll be able to see it. We're still in the same ballpark. We're trading at 28.60, and that's pretty much, we're looking at the bonds. Didn't do very much. I'm still bearish on the bonds. What I'm looking for in the bonds, folks, is I'm watching for that first retracement level. We gapped down on Sunday. We haven't filled that gap as of yet, but it'll be interesting to see. We got crude oil now trading at 60.64. Our order at 60.98 doesn't look like it's going to be filled, but it still might pop up there. That's only 30 pips away, so we'll be able to see that. We've got the euro trading at 12.39, folks. That is such a bearish chart. And if they rally this thing from here, I'm really going to be surprised, because the little rallies that we've had in the past 10 days, back on the 22nd to the 24th, we rallied a total of about 60 pips. And here we are in the same time frame between the 29th and the 1st, and all we can do is rally 30 pips. Boy, that's a sign of a very weak market, i.e. a stronger U.S. dollar. And we'll notice whether that's going to be important or not, but we'll do one thing at a time. So let's move on to the next question that someone asked, and that is about our favorite subject of all that we all love to talk about, and that is the, another question. 1 second here. Let's get it up here. Oh, natural stock. Okay, let's just move up. I thought that was a question for me, which it was not. We're going to take a look here at the FANG stocks. The first one we're going to look at here is the Amazon. Amazon's going to be up again today, so it's most probably going to be attempting to take out those highs with only 20 points higher. That's going to 25 points higher. It's going to do that easily. So we could be looking at a move up around the 1850 level in the Amazon, and whether that's going to be up 70 points or not, you know, I'm not sure. But we want to look at the next one here, of course, which will be none other than the Netflix. This one's been a little weaker than the rest of the market, but with the market gapping up today, we're going to be able to see if it's going to be able to get up to that 78% level, up around 381, which is $15 higher than where it is right now. And the close on Friday was 356 and change. So it, you know, backed off from that 3-drive pattern, but it hadn't gone down for anyone. Okay, now Bob is asking about a bottom in corn. Folks, I really like the corn market. Bob, I'll get back to those FANGs, because that question about the corn to me is very, very important. I want to get it up here so you can see it here. We had a very bearish report on Friday, and here's what I'm looking at in the corn. You can see we had the rally back at 402, and then the big move down. It went from 402 down to 384. It's most probably there's a lot of stops down there between June and July, which I think will take those out. And if we get them down around the 377 a bushel, Bob, is what I'm looking at, because that's a nice ABCD. It's new lows, and it's a double ABCD. Because if you look at that move from May to June and up to July and then down, that measures to 377. So that's where you want to be buying it. and you got another one telling you it's 377. So if you believe in pattern recognition, that's where you want to become a farmer. You don't have to risk very much there. You don't have to buy the land. You don't have to lease the land. You don't have to buy the equipment, lease the equipment. You don't have to go to the bank for money. You just buy a contract at the Chicago Board of Trade of 5,000 bushels, roughly 180 acres, and you can become a farmer. And all you have to do is put a stop in of around 10 cents. And if you lose $500, you can go out of the farming business and go into dental school or pharmacy school or medical school, or look for the next trade like I do. Anyway, it looks pretty good at 377. I don't like the big gap down, but that's related to the report and a lot of emotionalism. Folks, the one thing we know for sure is that the whole world is short corn. These mutual funds have monster short positions in the corn. But what they don't tell you is, for everybody that is short, somebody is long, but nobody's talking about that. Now, who would be long corn in a big down market like this? I'm not even long, and I like corn. That's what I'm looking at. See, somebody has to be buying that stuff, because when you sell something, you buy something. That's what contracts are all about at the Board of Trade and the Merc. So that's what I'm watching. I think there's a big probability, and the one that looks the best, I'm going to let you do this one yourself, because if you're going to do the trade, you should do it yourself. Take a look at November soybeans, boys and girls. If you want to see a bullish chart, take a look at it. This is really going to be interesting. Mr. Z saying that Friday's sell-off is analogous to the same time we had this 3 years ago. I do believe that it is, Mr. Z. It just doesn't. The thing that is really has got me amazed here is the fact that all they're talking about on these corn reports and other stuff is how the commercials are heavily short, but they don't tell you who's long. Now, who buys things with confidence when things are going down? It's not the public. So my assumption is they're accumulating the stuff. That's what I think. That's my. You always get into trouble when you have an opinion, because everybody has an opinion, and it's like an armpit. It usually smells after running 3 miles. Anyway, I like the corn at 377. I like the beans. Just do the work yourself on the beans, folks. You do it to yourself, because then you can take the responsibility for it. Take a look at July beans, and then go to look at November beans, which are the ones that are not even planted yet. And there's a lot of things that can happen in the last 5 or 6 months here. As we know, with the weather has been crazy enough this year. So who knows? Maybe El Nino will pop up, and we'll have a move like we had in 2012, where beans rallied $3 a bushel, $15,000. 877-927-6648 from the offices.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, folks, I've been asked to comment about Lyft. That's the new IPO that came out on Friday. As you can see, it opened at 88. It's now trading at 70. A little discount for everybody. What I was watching, as you notice, I had the ABCD pattern drawn in here, and I believe what we're looking at was a 382 retracement up there at 83, but we only got to 82. That would have been, I think, a sale, and of course, your profit objective would have been made on the opening here at 72. There's no pattern here, really, to do anything with. I followed Facebook and Google, and on their initial price offerings, and both of those gave tremendous buys, a whole lot cheaper than the initial price. I think on Facebook's program, it was at least, that's Zuckerberg, yeah, it was at least 50% off. I believe it opened at 46 and the buy came in at 26 or 25. And Google, that was in August of 04, that opened at 125. It backed off to a 61% retracement at around 70. At midday, it closed at 125 and never looked back. And that 70 was a 61% retracement. So I will be watching Google here, Lyft here, for some type of a pattern on this 15-minute chart. But frankly, there's nothing here right now. And, now it's down, with the Dow Jones up 200 points and you gap down quite a bit in this stock, that's just basically profit taking. So, there's nothing there. I mean, you just don't really have a pattern at all to look at. So find something that's easy, for heaven's sakes. Get one that, looks like it has some pretty good potential without risking very much. So that's what I'm looking at. So we'll move on from that level and see what's going on. We have an interesting pattern in one of the things that we're really bullish in, and that is the Australian dollar. The Australian dollar has come off that bottom at 69 and change. We're up now 200 pips from the bottom, and what we're looking at this morning is you have this 135 pattern that occurred. We backed off about 30 pips from that level, and we're testing it again. Any move above this 130, 135 would mean this 135 pattern has failed. That's the beauty of it, because it has very, very low risk. You're trading something that's worth $71,000, and you only have to risk $300. That's really good risk reward. You got to follow the risk, because you don't know what the reward is. That's the one thing that's a big unknown. The risk we understand because we put our stop in, but the amount of profit, and even if it's going to be profitable, those are big unknowns. So I remember one of my favorite stories from Drexel, Gene Fairman, who was one of the big brokers. He had Bob Hope as his customer, and he had some really big hitters, and he had one guy, just a really nice fellow in the jewelry business in Los Angeles, and he was in the office one day. He says, I really love this stock business. He says, if I go short, I lose money. If I go long, I lose money. And if I don't trade, I miss a great opportunity. And everybody just cracked up. That just about described investing, folks. Remember, it's not about the amount of money that you make, it's the amount of money that you don't lose. So keep focusing on how much you could lose. not how much money you can win. That's the whole key. In fact, that's what, if you watch the NBA or the NCAA basketball games yesterday, it was all about defense, with the exception of that young man from Purdue. Boy, did he put up the points. 42 points for Mr. Edwards, and everybody was saying what a great game he was. Let me tell you what a great game somebody back in the old 60s played named Pete Maravich, Pistol Pete, from Aliquippa, Pennsylvania, put up average games per point was 44.5 points per game when he was in college at LSU, and that's when they didn't have the three-point line. If they'd have had the three-point line, he would have probably averaged 60 points a game. He was in the last year of his playing in the NBA is when they first came out with that three-point game, and that's what, be able to see this. Marshall's asking, when did I first become a mentor? Marshall, that was 1986. I was called by a young lady in Lubbock, Texas, the home of Texas Tech Red Raiders, and her husband was a radiologist, and he called me up and he said, I would like for you to teach my wife how to trade. And I says, where did you get my name? And he said, well, I called Ed Dobson at Traders Press, and then I called the Chicago Mercantile Exchange, and they said, yeah, he might do it. And I said, I really don't have an interest. And he said, I'll pay you $5,000 if you'll teach her in 1 week. I said, well, it'll take longer than a week, but I can do it for that. And so she came up. Her name was Jocelyn Calkins. And the big problem was when I met her at the airport, her and my significant other at the time became really good friends. And so I had her from 5:30 in the morning till 4 o'clock in the afternoon. We took a little break, and then she was invited over for dinner every day for 5 days. And so at the end of that Friday, I was very tired, but it worked okay. And then I later taught both of her sons, and so that's how I got started. And that one thing led to another, and I started meeting friends and traveling, and I've only had about 4 or 5 bad experiences in 40 years, I think I've trained about 1,000 to 1,200 people, and I'm still in contact with over 600 of them. But there have only been a couple of bad experiences, but that's neither here nor there. But that's how I first started doing it, and I don't charge anywhere there. Shucks, Skype dropped on me. I think that's what happened. Hello, 10-4, 10-4. 10-4, Rubber Duck, 10-4. Broadsword to Danny Boy. Okay, we're back in business. Okay, the chicken is landed. The eagle's in the pot, or something like that. Sorry about that, folks. That's related to Skype. Nothing else I can do about that. Anyway, that was the reasoning for the teaching, and I've really enjoyed it. And when I go to Hong Kong, I have so many students there, and we do it every year, and we all get together, and it's really fun. And to see these people, how it's changed some of their lives, and it just takes time, and a lot of people just don't put the effort into it. But if you put a little bit of effort into it, you don't necessarily have to do pattern recognition. You could do moving. Look how well Steve Rhodes and Basil Chapman use moving averages and oscillators. You just got to find something that works in your favor and that you believe in it. It doesn't necessarily have to be pattern recognition. I happen to like that because it makes sense. You can see things that repeat it over and over again, and that's what you're really looking for, and that's the edge that you're trying to get. So that's all I can tell you. Mr. Z, thanks for the comment, but your history book is just as good as mine, buddy, because you've got he's got his PhD from the School of Hard Knocks also. Oh, Mr. Z, I got a really great book here. I got it from Tom Baldwin. He sent me a really nice signed copy of his book about talking big. It's about the story of Tom Baldwin and Refco. And when I see you soon, which will be probably in May, Mr. Z, I'll bring this book back so you can read it. But it's a really interesting book. He has a beautiful vineyard up in Central California, right above Santa Barbara, where Neverland is by where Michael Jackson's place is, up in the Santa Ynez Valley, one of the most beautiful places in all of California. And guess what? Beautiful, it's for sale for 16 large. We'll be looking at these things in just a little bit. We'll be right back, folks. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, looking at some of these markets this morning, I think the ones you want to pay attention to are this big gap up we have in the Dow Jones, up 200, S&P up about 1.6 million, and the NASDAQ up about 80. So keep an eye on those. There should be some resistance at 2860 to 2870 in the S&P. There's a big daily number up there. The NASDAQ number has exceeded it. The IWM has not. The Dow Jones has certainly exceeded it. So, if you're going to find something to sell, find it on a shorter term time frame, because you can control your risk better than if you're trying to do, a daily chart. There's just nothing here in the dailies that I can see that tells you to be short today. There might be tomorrow, but it's not today. The bonds have now hit that 149 level. We're down 1.5 points from the high. I believe that we've made a major top here in these bonds, i.e. higher notes and higher bonds. So whether that's going to be the case or not, we'll have to wait and see. And, of course, the big one is the euro, trading at 112.40. Anything below 111.99 would mean to me that we're getting ready to see the U.S. dollar really get very, very strong and the euro get, very, very weak. We've got the pound at that 130, 116. There should be some resistance at 130, 170, but from that level, we'll see if that's going to be the case. Mr. Z is just telling us now that the June NASDAQ at 74.87 is an exact 78% level. I have to double check one, but that you're probably watch that one really close, folks. I haven't looked at the NASDAQ this morning, but it should be very, very close to that level. Let's get it up here so that we can see it. This is the big composite. Yes, we're right. You're right, Mr. Z. You're gapped up to that same level, so that would be interesting itself, because if it doesn't go through there and there's no buying, then you know what your risk is.